What's going on, traders? Andrew O'Connell here with Pristine Capital. Welcome to our market recap video. Snapchat news after the bell. Crazy stuff going on. Let's talk about this market action. Before we do that, risk disclaimer: nothing in the video should be construed as investment advice or recommendations. No YOLOing your account into my trades. All right, let's dive in here. Let's talk about these box scores. We had the S&P 500 finish up 1.87% for the day. We had the Nasdaq QQQ up 1.66%. IWM small caps were lagging behind the Nasdaq today, only up 1.21%. Dow Jones was up 2%. And we had the ARK Innovation ETF finish down 0.64%. You can see most of these indices closed up towards the high end of their day's range. And volatility did come off. To be honest, it wasn't really like a huge volatility crush like we see sometimes when we get these large advances in the indices. Breadth was positive, but you'll notice that the small caps actually had the worst breadth. So the participation in this rally actually decreased compared to last week. So that is definitely noteworthy. ARK did not participate. That could have something to do with the fact that Zoom was reporting earnings after the bell. We can take a look at what Zoom is doing. But yeah, it was down 0.64% for the day. And then cryptocurrency also did not participate in today's rally. Bitcoin actually reversed from green to red intraday, as did Ethereum. My trend model flipped to a +1 today from a -1, which is good. And you can see overall we had 77% up volume in the market. So a lot to unpack, but let's do this. So the big news, and you might be looking at this, oh my gosh, this is awesome. Definitely is awesome. The market's turned up. Everyone thought that we were going to have, a market crash. But then after the bell, we got this Snapchat news. Snapchat shares fall 14% following a Q2 warning. So they're saying that the macroeconomic environment has deteriorated further and faster than anticipated. And I believe Snapchat shares, as of right now, they're down about 30% in the after hours. That is a big drop. And you can see Facebook, Meta, Twitter shares are also following suit. I believe Google as well. Pretty much everything in the digital advertising space is taking a hit in the after hours. And I know a lot of investors, they're going to look at this and say, I knew it, I knew it. This is going to crash the market. But to be honest, we'll take a look at the price action. I think this could be another bear trap. And we'll talk about why. And that is because the Federal Reserve is starting to blink. This is something that we pointed out on Friday's recap. We had this headline from Friday. Bullard said, we can be lowering rates in 2023 or 2024 if we get inflation under control. Up until that moment on Friday, it's pretty much all hawkishness all the time from the Fed. Now we have Bostic coming out and saying, depending on the economy, it may be prudent to take a break in September. So this is definitely a huge pivot from the Fed. I think it's definitely flying under the radar quite a bit. But we'll have to see. Does the slowing economy tank the market? Does the more dovish Fed boost the market? Do they cancel each other out? As always, I'm going to be relying on the price action to really make my determination. Finviz heat map, nice and green today. And I think it was pretty good that Apple actually picked up the slack. And it was up 4%. Microsoft as well. And some of these consumer defensive names that were crashing last week, they were actually positive. Now let's take a look at these indices. And then we'll go into the sector rotation as well. So yeah, look at this. The S&P 500 is down 0.81% in the after hours market. And you might be thinking, oh my gosh, we're down huge. To be honest, compared to the volatility we've experienced over the past couple weeks, 0.8% is really nothing crazy. And if you look at today's candle, we opened up at 39.08 in the S&P 500. As of right now, we're still trading well above 39.08. So to be honest, this is really it's a crazy catalyst. Everyone already knows the economy is slowing, and we'll have to see how the market responds. But right now, just retracing some of the gains from today, that's perfectly fine. Let's take a look here at our Nasdaq. See, if you get too wrapped up in the narratives, or you're anchoring on let's say the 5 minute by 5 minute price action, you're going to get worried in this market because it's very volatile. Nasdaq is actually taking a much bigger hit. It's down 1.47% in the after hours. And yeah, we're trading back down to levels not seen since the open this morning. So yeah, the Nasdaq definitely looks like it's under the most pressure for sure. Let's check out the Russell 2000. Russell 2000, yeah, it's only down 0.45% in the after hours, nothing too crazy. And let's see our dogs of the Dow. They are down 0.35%. It is very odd that some of the innovation stocks and companies that are more on the farther end of the risk spectrum did not participate in today's rally. Who knows? Could someone have potentially known about the Snapchat thing? No clue. Honestly, who really knows? Cryptocurrencies were definitely a little bit on the weaker side. Let's go into the sector rotation a little bit deeper, and then we'll talk about my trades for today. So let's take a look here. Boom, boom, boom. Okay, sectors. So today, definitely noticed a bit of a change in character with the XLK ETF, which is the mega cap tech. This really led the market along with European financials and along with energy. Energy just remains bid throughout this market. It is one of our top momentum leaders. The KWEB Chinese internet stocks are one of the only groups that was trading lower today, along with MSOS and the ARK Innovation ETF. So everything on the farthest end of the risk spectrum took a bit of a break today in favor of those mega cap names. Because this is only a one-day thing so far, and because I added my exposures to those groups, like I do have a China position on, I do have an ARK Innovation ETF position on, but I got those on at such, honestly, very good trade locations to where, like, if it underperforms for one day while the megas rally, that's perfectly fine. We'll have to see, though, tomorrow. Tomorrow they might have a big day of underperformance, so we'll have to just be ready for that. Style factors also saw the same dynamic where, look at this, high beta was our biggest underperformer. It was only up 0.58%. So something definitely seemed like a little bit odd today. And it's one of those things where, hey, let's give it the benefit of the doubt. Maybe this Snapchat thing was like the big, scary headline, scary catalyst, whatever. Today we did have Zoom report earnings after the bell. Let's take a look at how Zoom did. Zoom reported they actually beat on their sales and earnings. And this company is up, trading around $95 in the after hours. Take a look here. So yeah, Zoom, pretty good earnings report. This is a name that some of us in the Pristine Capital trading community were looking at potentially trading today. Yeah, this one definitely defying the odds. It's the number 2 position in Cathie Wood's ARK Innovation ETF. Let's actually take a look at my trades for the day because I did get some trading activity in. To be honest, my trading activity has been a lot lighter over the past couple weeks because I know that this environment is treacherous. If you're buying into big green candles, you're buying in at the top of the day's range, you're likely frustrated. You're likely saying, oh my gosh, I can't do this. But if you're just being patient when the market goes up a lot and or you're already fully allocated from capitulation levels last week, you're not really feeling the pressure. So what I did this morning, right at 9:35 a.m., I have my TQQQ position. I sold some puts on it and took delivery last week of some common stock. I sold the 30 strike calls against my TQQQ expiring on March 27th, took in some premium and reduced my cost basis. And then I closed my ONDS common shares for $7.02. I paid $7. This was also the result of a premium sale. And ONDS, it's a name I like for the longer term, but it's not generating cash flow right now. It's very early stage in terms of its just cycle, honestly, like in terms of revenue, cash flows, etc. So I was like, hey, this one's not really moving like an absolute star. Let me just dish it off. So took it off for like a 2-cent winner, and this one, it looks like it ended up closing a bit lower on the day. But I was making some room in the portfolio. I added in one of our Pristine Capital weekend watchlist names, Celsius. At 59.43, that was our trigger level to enter this stock. And Celsius is looking pretty fantastic. So, of course, it's likely going to get hit tomorrow, at least on the open. Check this out. Celsius looking great. And my entry point for this was pretty much like right above the close on Friday. This went off as an alert in our Discord. And yeah, I just saw the alert go off. And that's the beauty of doing your homework. You're not like running around, chasing the market like a chicken with your head cut off. We made our trading plan this weekend. The alert came into our Discord. I just said, all right, I already know I did the homework on here. I know where my stop out's going to be. Let's dive in. See, I took that Celsius trade. We'll see what it does tomorrow. Those are my only 2 trades for today. And yeah, I'm just trying to keep it simple, keep it light. That way I'm not freaking out over 0.79% downside in the market. So again, heading into tomorrow's session, going to be super important to see if the slowing economy drags the market down or if the potentially easier Fed actually boosts the market. With that said, that about does it for this market recap video. Hope you all had an amazing trading session. And as always, I will see you all tomorrow. Have a good night, everyone.